Hi guys, welcome back to the Market Outlook. I'm Stefan, and basically let's get into the video. So starting at the dollar index, I'm on the weekly time frame. If you guys followed my channel or followed me in the Discord, you already know that I am short on the dollar fundamentally. And it's not about what the next move will be, but what will happen throughout the next year, for example. So thinking long term. For me, I see some upside to take out some highs and then downside, continuously a trend downside. So I believe that is the case because number one, US and Iran are at a final stage of a peace deal, and this is really risk on, which will hurt the dollar because the dollar was rising because of the war and because it's a risk on asset and because people are afraid to put their money into some other asset and they flee to a safe haven like the dollar. And in this instant it was also perfect because if the Strait of Hormuz is closed, the dollar was rising because it was tied to oil because of the high oil prices. So if we actually look at oil, we can see that it was heavily rising with the dollar. So this whole move and then the next moves were pretty much supportive of the dollar. With this whole de-escalation, we seen the dollar dump almost to when it was the start of the war. So this whole move it now just dumped again, but we don't see that on the dollar. We see even more continuous strength. So this means for me that it wasn't priced out yet, that this whole dollar strength, and also with the upcoming midterms, I don't see Trump fighting more. And also with the upcoming midterms, I don't see Trump escalating even further in Iran. His records were at a low. Nobody agreed with this war. And if he continues to fight further and the oil prices keep rising again, he will never win those midterms. So till then, I see further de-escalation to support those midterms and please people. So the second thing that is also tied to the Iran war is the second thing why I think the dollar will go down is because US wants to compete with China. So if they want to compete with China, they need to really boost their manufacturing, and they really need to have a lot of exports and not rely so much on imports. That's why we had this whole broad picture in the Trump administration with the tariffs and everything all around it. And that's why you need a weaker dollar for it. You need a weaker dollar to boost manufacturing, to boost businesses, and a weaker dollar also means that it will be cheaper to export and it will be more attractive to foreign buyers to buy those goods from US. And if you see, this whole thing was actually working. So they wanted to make the dollar lower. So they wanted to make the dollar weaker and it was going down. But then we had a quick surge of strength. Also, keeping the whole picture in mind with the tariffs and everything, Trump fired Jerome Powell and replaced him with someone who maybe will be more dovish in a Kevin Walsh, who was in the last couple of years very dovish on the dollar. And this is also a factor that plays into it. And going to number 3, I believe we could see a pump on the dollar to boost liquidity and to just see liquidity being flooded in the market to then really dump it. So basically a pump and dump in a currency, something we've never seen before. So we see Kevin Walsh being very bullish. He was very bullish in his speech. He was talking about inflation being out of control. We need to combat this, and this is the main factor. But inflation will come down naturally if we don't have further escalation in Iran and US. So what this means is it could be just a escalation signal to pump it up. And we see like huge buying right now on the dollar. And I also see that we have many officials talking about AI, inflation from AI, but AI, it's deflationary because you have scalability and you have more job efficiency, and you can replace jobs and basically have almost a free worker just for you 24/7. And AI is bearish for the dollar because yes, we have inflation because we have huge spending on AI and on those data centers, etc. But in the future, and this is important because the markets don't adjust on what's happening now, they do price in what's happening in the future. And in the future, if like by 2027 AI really works out and you can really see the changes on AI, then we see deflation, which means it's a weaker dollar. And these three things say to me that we can see a lower dollar. But until this happens, we can head a little bit higher. So just analyzing the 4-hour time frame, obviously we are bullish, and I would like to liquidate this high first before actually doing anything, and possibly this high, but I'm not very eager on it. I believe this is the minimum high that has to be broken for us to see it slowly start dumping in the future once those fundamentals align. So I'm actually eyeing up another long. So we have the break of structure here. We have internal liquidity here, 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 and here. From basically anywhere we can see a long. Just look for confirmations, like a change of character, and then just go long. Looking at this, we can really see a short on USD and just keep on shorting it, and just short it from here or here, and just basically mirror what the dollar is doing, like the dollar index. It's very correlated, like it's just a mirror, as you can see. Then on GBP USD, as you can see, the 4-hour looks the same. We have liquidity point, and we can look for some shorts. But with GU, we have to be careful because the GBP is very indecisive right now. We had Starmer, so the Prime Minister, resigning, and now it all depends on who's going to be next. Is the next one going to be bullish for the UK or bearish? So we have to look out for those fundamental changes. And the next thing will be inflation. So the inflation is at a good point right now. So I think it's around 2.7%, but I'm not that sure. But it's at a well-balanced place. But on 22nd of July, we have new inflation data coming out, and it's expected to be higher than normal. So it's expected to be very high. So if we see really high inflation data, like it's already been forecasted, or even higher inflation data, then the Central Bank of England can say a lot of inflation, and our labor market is very strong actually. So it's strong and there is room to hike, then we could see about taking a hike maybe. Also coupled with maybe the next prime minister will be better for the economy, or to be at least expected to be better for the economy. So who's going to win or who's going to be likely winning, like the picture is unfolding right now, then we can see a lot of strength on the GBP. So keep that in mind. Set yourself a date on July 22nd and just keep on following everything here, and then you'll be good to see the next shift in the markets. So for me, if we see some more stability, or if we see a possible new candidate that will be better for the economy and will be possibly winning, and if those inflation numbers on July 22nd come out as expected or higher, I will be thinking about taking a fundamental long, because I believe that the press conference that will be then after it will be very bullish because of the fact. And that's how you use fundamentals. You have to stay one step ahead and think what the central bank will say in the speech, what's most likely, before they even said it. So keep an eye on that. Then AUD USD. So as you can see on AUD USD, we have this break with this low, this high, and we just liquidated some liquidity here and even final liquidity here with us being in the 3-monthly open. So from here we could look for a bounce actually, but we have this break of structure and this high is in control. So if this thing breaks, then we would be looking for a long. But the problem right now with the AUD is that they don't have really much room to hike. So they have a lot of inflation, but their labor market is a bit weak. So there's not a lot of room to hike, which means that this could drift down lower if we don't see any improvements on this one. And once we maybe see then the labor market being better, then I would think about taking a long, which would also align with my dollar weakness. But right now, I see potentially more downside with the midterm dollar strength and the Australian dollar weakness right now. Then looking at NSD USD, we've seen a lot of weakness on it right now. Although we are still in this bullish impulse from here to here, I would only focus on the last price action that is most recent, and I see a lot of downside because the same with AD, we have inflation, but they hiked already a lot, and they said they will be hiking, but the labor market is still weak. That's why we have seen a lot of selling of the NSD because of it. They have come out and said they will be hiking more than before, and will be hiking a lot, and this was the move here. But after that, we saw this huge down because everybody understood they can't hike with such bad labor market and such bad growth. So that's the same with the AUD. If we see good growth numbers coming out in the next couple of months, then I see a lot of upside also with dollar weakness. But if not, I see it just drifting down lower. Then USD CAD. So on USD CAD, we've seen this huge buy up, and if you want to focus on the 4-hour and just what is happening right now, I would just look for some liquidations below those lows and just for change of characters and trading up higher. But from a long-term perspective, I could see possible downside, but it's not the most clean play. It's not the most likely play. So you just have to keep that in mind and see how things develop, just like with the GBP. And for me, I am short on a dollar. So I believe that we will see in the future some downside. Also with taking out a lot of liquidity here and seeing this break of structure that is like bullish right now, we should at least see some form of a retracement that we could capitalize on shorting it. And also the COT report, so the institutions are very short on the USD CAD, although we have this huge move up. So maybe they know something we don't. I wouldn't completely rely on it, but think about something on your back, on the back of the head. So why are they just keep shorting it? Why are they not repositioning themselves to long it again? So that's something to keep in mind. So the CAD has actually very strong jobs data and possibly also growth data, and this means that it could possibly strengthen, but it's being held back by some bad trade deals and also the sell-off because the war stopped, because CAD has a lot of oil and is a huge exporter of oil. The CAD strengthened because of the war, and we have seen actually the sell-off on the CAD on all the CAD pairs, but we didn't see this sell-off on the US pairs because of the war stopping. And I could see possible upside, but right now the cat is a little bit neutral, and it could be possible that the trend shifts and we see a lot of strength on cat and a lot of US weakness. Then USD